Welcome to a capital hungry breakdown of GBPJPY. So basically what we are trying to take advantage is some potential optimism in the markets around Boris pretty much cleaning up shop and economic change to come, similar optimism that came along with elections. What could really validate this continuation is continued good UK data. We saw that previous week's PMI data rebounded, and we also had the Bank of England give some support to the British sterling as well. We know that yen, of course, does play a big role in this pair, and any tension escalations can further inflate the yen. But on the fundamental and data side, actual Japan economy and GDP is at its lowest in a decade or longer, I think it was. Don't quote me on that, but the GDP is very bad. It was around 1.5, negative 1.5%, even worse than the forecast, showing a huge slowdown in Japan's economic growth. So from a data perspective, JPY is weak. We just have to watch it with any tension-related headlines that we know can cause inflation and spikes in safe havens like gold, Swiss franc, and Japan, Japanese yen. Okay, so what I'm looking for here and what we have going on for the week, just to keep in mind, is the UK average earnings index. So to me, I have seen that. Oh shit, sorry, gosh. But we have seen that data has been rebounding in the UK. The labor market also rebounded, and overall manufacturing, PMI, and those numbers also rebounded. So I can see UK CPI and some of this UK data this week being good and helping support along with the British optimism and along with the Brexit optimism to give support to the British sterling further and see some upside higher timeframes to this monthly trend line here. So we are going to be looking at the price action here, but I just want to look at some of the macro view when we're looking at the British sterling against the yen, and that we can see when price initially created these lower highs, right? You can see that price also created a low here. This is the start of a potential trend or channel down on the higher time frames. What's key to note is that these are some of the previous highs of GJ, and then when you had that secondary lower high made, price did not break below the previous low, right? Price exhausted here, and since then it has been moving in sort of a shitty range, similar to here before it has its sort of upside move, right? And the secondary tap of this demand area has also failed to break, right? So it's key to note that there is seller's pressure. There has been seller's pressure on this pair due to Brexit, but the optimism coming around it and some of the key technical areas that are failing to break is showing us that unless we really break 130 on the higher time frames, it's hard to see downside, and we need something a lot worse than Brexit to impact the sterling now. It's sort of like the worst shit has already passed, right? And there's a lot of optimism and potential for growth from here. And it also really depends on how the free trade agreements go between UK and the EU. So it's key to note that that's why I drew that trend line from these points here. I'm just observing the structure this way at these key areas. Market structure is relevant on every time frame, right? And overall zoning and trends. It's just this is a lot more macro perspective because you're looking on a monthly chart and we're looking at a trend back from 2007, right? So what this is also telling me is that when we zoom into our market structure here and we have this trend line break that we were using as a sort of a support area that we broke above it, right? So what I'm saying there is we respected that demand area that I showed you from the zoomed out perspective. This downside that was caused by a lot of negativity around Brexit has been fundamentally corrected, right? We have a clean break and hold on 141. We do have a bullish range up to 147, 148, and we are holding above this minor monthly bearish trend line now. And we've already started, and this new month has already created its lower wick like we expected. So if you guys want to review that on how we understood that, that's what I was looking for previously, right? So if you guys go back and review the last breakdown, this is the monthly bearish trend line. We would only see safe sells if we had a key break before this area, right? So before this one, I think it's this one, I was already talking about a potential retest of the monthly trend line to make the new monthly lower wick on 2 weeks ago analysis. And same thing about the safe sells, we really need a key break below there. Otherwise, we're going to see upside to these ranges. So my analysis from 2 weeks ago and last week hasn't really shifted on a higher time frame fundamental perspective. But price itself has been playing between these key ranges due to a lot of up and down with the yen, and now optimism coming around GBP mix and data. Now we finally have some clean bullish market structure, in my opinion. So this has been completed. The potential retest. We've already held, and now the following analysis, we've held above this key area, right? The monthly trend line there. Sorry, this one. We've held above this key area now. And now we've had that monthly wick formed. And now I can see some potential upside, especially when we start breaking above these key levels, which we mark to get this range fill. So that's how I'm looking at it from a higher time frame perspective down, and how I've been using some of the previous analysis and just continuing on with it as long as that bias still holds. So now we understand that there is a lot of room for upside on this pair. It is respecting some very strong areas. It is creating bullish market structure. We do have the fundamental optimism around GBP, and we do have a strong chance for continued bulls, especially if we have strong data this week that will follow through and add on to the strong data we saw with PMI and all that stuff. So now that we understand all that and the market structure and some of the higher time frames, flow and trend and everything I explained, now we can start zooming in, creating some better zones and seeing how we can take advantage of it this week. Okay, so I'm just going to be using some of the monthly candle bodies here to create some of the main zones. 141, of course, was a very key level here, but I'm just going to clean it up to make it on the candle bodies at 141.5 level. I like these two previous candle bodies where they close on the monthly. So honestly, a break above 144.2 and you easily have safe buys to fill the range. We'll start marking off some zones for potential further upside we can see as well. Lines up with psychological price levels we already like to use, like 0.5, 0.2, 0.8. And I'm just placing them in my candle bodies and then just refining them a bit and rounding them off. We can place some zones if we do get some negativity and see some downside. Like it's a very key level there. It's a very strong support. Okay, so those are some of the key zones based off these monthly candle price bodies, where they actually close and open for consecutive months, lots of days of data. Price on the weekly is showing us a support created at 141.5, and price for now a consecutive week breaking above and fully engulfing this previous weekly candle, and breaking above holding a support above our monthly bearish trend line. Of course, we still have this higher high made on the week, and that's sort of the range fill we're looking for. We can see a lower retest of around 142.5, or even this candle body here. Now that I'm looking at the weekly, 142.8. But this right here, this level right now, 143.3.2 is also a key resistance. So we're gonna add that range in there. We're gonna put out 3 because these candle bodies, we would need a clean break above that to start playing these ranges on the upside. This is a weekly, so some of these ranges are a bit tighter, but even like this range to here is still about 45 pips, right? And if you have a break above that range, let's just say you were safe and you waited for more GBP strength, we got an impulsive break around above 143.3. There's a higher chance, because the historical value of this zone, that you have weeks worth of price creating a resistance there, that once you do break above it, there's a higher probability of retesting that as a key buy price area now, right? And then if you catch that 45 pip move and then you break above 143.8, you can scale it up to another 80 pips. And then the ranges get a lot cleaner when you're looking left, right? But we all know that GJ does, when it consolidates, it plays in very tight ranges for days or weeks until it starts making some very clean moves, right? That's just the way this pair behaves. So we can just play the ranges out. Those are some of the very key levels I'm looking at. Sorry about that. So now, yeah, it looks very clean, right? The market structure, we can see the bullish market structure. We're looking here on the 4-hour. You can connect some of these points as well and say that we've broken above this structure. We've created a stronger leg and impulsive break there, but I'm just going to keep it a bit cleaner. So it is good to note that we did break above that, but we are showing some exhaustion at around 143.3. So a retest to maybe even 142.8 or 142.5 for the new week, and then a continuation up would be fairly valid. So what we're looking for now is any relief on the yen, because we know it's fundamentally weak with the GDP data we just got for it, right? So if there's any coronavirus de-escalations, like for example, the World Health Organization team is starting their field inspections, there can be a lot of manipulative headlines. There can be literally a headline that says it's a lot worse than they expected, and the next day they said, you know what, never mind, it's contained in this area, but it's bad in this area. Overall, it's not bad. That's the way these fucking markets work, and these whales manipulate price. You know what I mean? It just is what it is. But if we do have some optimistic headlines related to it, we see gold deflate. We see global markets, especially Eurozone markets, continue to stay green. FTC 100 and the Eurozone equities, right? That gives us a lot more validation that yen can lose strength, and overall base currencies like USD, Euro, AUD, GBP, they can gain against these pairs, right? So what I would look for if you want safe buys is a clean break above 143.3 and a support created there. You're breaking above this previous high as well, and you know you're going to start seeing a nice range to 143.8 and 144.2. Otherwise, we're looking for a potential pullback to 142.8 or 42.5 and continued upside. I don't see any long-term downside on this pair unless we break below 142.5 and back below the monthly bearish trend line. So does everything make sense? Well, we're looking for the rebound in UK data to support some of the good data from the last couple of weeks and the strong Bank of England sentiment. There is a lot of optimism around GBP sterling. How I created these zones, the higher time frames down to the lower time frames, and bringing it all together to see what piece of the pie we can take and be confident in executing that. So if there's no questions in the chat, I'm gonna always assume that everything made sense and it was clear, and we know what to look for, what ranges to play through, and just watch price action develop and take those plays. All right, I'm gonna take that silence as everything makes sense then, guys. Don't tell me after. Be confident, be open. All right, it's good then. All right. I'm gonna save this, send it over, upload it, of course. CFTC, I'll make I'll do a separate actual educational webinar on looking at CFTC, like the call reports and like matching it up with like client positioning from like Owanda or IG, and also like how often to read it or when to use it. You don't really need to look at it too often, maybe like once a month, and just see if it's overall lining up with what you're seeing on like the retail client sentiment, and if it's lining up with like the higher time frame structure and stuff like that. It's just an extra sort of confirm, right? It's not really going to tell you anything new unless you really track the changes in order flow week by week, and you track that and like calculate the differences. But that's a whole different trading strategy and game in itself. Because what's really key when you look, I'm going to stop recording this one.